Thanks all of our esteemed panelists for being here today. We are talking about what it all boils down to, liquidity for RWAs. I think we have a pretty technical, probably DeFi-friendly faces in the crowd today, but in order to lay the foundation, I would love for Jonas to maybe first define what we mean by liquidity. Why do we care about liquidity for RWAs? Why is this important?
Definitely get the spotlight there.
Our market maker in the house.
People who know Wintermute as a market maker. I think the reality is, I think Cameron puts this picture out that tokenized equities is the next big thing. I think we to some extent agree, but I think for it all to matter, you need demand. In order to have demand, you need to have a good customer and you need to have a good retail experience. And that requires liquidity. Because when people come on chain today and they want to buy Tesla stocks or any kind of RWA, it's a pretty bad experience from a liquidity perspective. And I think that's the core issue I think the industry is facing. Because I suspect everyone in the room here is fairly bullish RWAs, but I think the concept of liquidity needs to kind of be woven into those conversations.
And so we've got representatives from kind of three different perspectives from the industry: a builder, like a company in the space. We've got Wintermute, we've got Kraken, with Xstocks. I would love to actually dive into that a little bit more. How would each of you assess the state of liquidity for RWAs today? And how would you rank some of the biggest barriers to actually creating more, sustainable liquidity infrastructure? And maybe we'll start with Will first and go down the line.
Yeah, great. Thanks, Devin. So I guess a little bit of background also. I was at Standard Chartered for a couple of years. We one of the things I worked on was together with Wellington launching a tokenized money market fund, investment grade rated product. Spent a lot of time focused on structuring, creating the best possible tokenized money market fund. I guess the equivalent of a quote unquote risk free asset on chain. And I think ultimately our view in building that product, like many others here who built tokenized assets, is that unlike traditional products, this as a token was mobile, could be transferred from one holder to another. I think there's a lot of perhaps confusion about what liquidity is versus mobility. I think mobility is inherent in tokenized assets, and I think that's something we've broadly delivered through the work that we've done today. I think liquidity is something meaningfully different and crucial for us to solve as an industry. And liquidity ultimately means the ability to transact in any sort of size with any sort of price certainty in these assets, and that requires effectively supply and demand. And I think it's relatively easy to look across, not just on-chain data, but the broader state of the industry and see that right now what we have is a lot of great products that have inherent mobility, but we don't yet have the supply and demand to make liquidity a reality.
Yeah. Jonas, how would you add on to that, or what perspective would you bring to the conversation here?
I mean, I think the reality is we probably have a decent amount of supply already. I mean, the Kraken, the Xstocks guys, Undo. On the equity side, we have a lot of CLOs. We have a lot of private credit coming on chain. But I think if you go and look on any block explorer, you see very few holders, aka very little demand. Clearly, I think we all want that demand. We all want to come out of the confines of let's call it TradFi and be able to have it on chain, give access to US equities to the full globe. But I think the reality today is that demand is maybe there, but I don't think we've seen on chain the true demand for it. And I think I'm sure Mark can give a more positive view. I think we are more as Wintermute realistic about where is it going to come and how can we help create a liquid market? Because today, very few trading firms, including ourselves, straddle between DeFi and TradFi. And there's very few firms out there that helps with that liquidity.
There's chicken and egg too, right? Because how do you generate demand if these products aren't liquid?
Well,
exactly.
Some of them. Let's start with the fact equities are liquid. We know that, right? Very, very, very liquid, much more than crypto in most cases. So I feel pretty confident. Well, there are markets for these things, and there will be markets. There are ways to bridge that liquidity to get the chicken and egg problem solved on tokenized equities as well. It's a totally different system, though, from the way you build liquidity in crypto on chain. If you're building a brand new token, you can take a bunch of it as the founders as you mint it and put it in all sorts of liquidity pools all over. Liquidity pools were actually part of the solve to get liquidity on chain for crypto assets. That doesn't work for RWAs because for each RWA, the underlying is something you have to go and buy typically or own.
There's a real underlying.
There's a real underlying for it, and it's not magic internet money in a way. And I think that means we're going to have to come up with different systems and approaches to handle liquidity on chain. It means order book based DEXs far more valuable in the RWA space than liquidity pool based DEXs. And I think we're probably just at the very early days of starting to solve this problem. I think until recently, there was a little bit of a supply problem. There wasn't a lot of these kinds of permissionless RWAs that people wanted to buy and could buy in regulatory sound ways. There were a lot of things tried and a lot of pieces out there, but to bring bigger players in who can market make, et cetera, you need to hit a different bar. And I think we've now hit that bar and figured out how to do that. We obviously have a more permissive regulatory regime in the US, which helps a lot in that regard as well. And now the question is, okay, builders here and builders all through the world, how are we going to bootstrap liquidity that we know exists on equities in the world? How do we bring that into on-chain? How do we use that? How do we get that out of that chicken and egg problem? I'm super bullish on it, but we're super early days on making it work.
So we've got a bunch of interesting different like facets here. We've got like structural differences between on-chain and off-chain. We've got like players in the space. Are there enough to help kind of like build that flywheel? Touched on regulatory a bit. We touched on, the question of demand. So let's maybe begin to dive into each of these, one at a time. I think one interesting thing, Mark, that you just, that I think you can bring to the table, being a rep from Kraken is like, how do you, if someone's, buying an X stock on Kraken versus trying to bring it off chain, like what are the interesting like structural differences in the underlying like technological infrastructure that you have to deal with on chain versus off chain or SEX versus DEX maybe is a better way to think about it.
So look, on the centralized exchange, it's actually super easy. If you can't get a good price from trading with someone directly, I can just sell it to you. I can mint it and sell it to you, or if you want to sell it to me, I can burn it. That's a super efficient process, works really easily. We can actually do that in seconds. And so on Kraken, within the 24/5 market, you should never get a price dislocation beyond, a very tiny amount. That's the easy job in a way. And then you can take that on chain. You still have mobility. You don't have liquidity, right? And so then the question is, how do you... But that fact should be true on chain as well. The fact that there's a big market out there where you can buy and sell it to somebody else should allow us to get to a place where DEXs can also have that same kind of liquidity, where there's always someone with a tiny amount of spread willing to bring it back and mint it or burn it as needed in order to keep that price standard. That gets us to 24/5. Even the 24/5 markets in the TradFi space are a little wobbly at times, but pretty good. Getting to the 7 is a whole other thing that we'll get to over time. And I say all of that, that's somewhat of a cop-out in a way. The hope is that we get to a place where we don't need to bridge back and forth between them, but we're not there yet. And we don't need to be there in order to make this work in the early days. There's so many other advantages of the on-chain part. But on a centralized exchange, there is absolutely no reason why you can't get an X stocks price that exactly matches the price you could get on a traditional broker. And you get a whole bunch of advantages if you buy it via X stocks than if you buy it in my shitty Canadian broker, as an example.
Jonas, what about as a, coming from Wintermute, I know you're at Ventures, but I'm using you as a rep for like market makers generally. How do you think about maybe some of the barriers or obstacles from a structural perspective of LPing or ARBing, dealing with these assets on a DEX, like even Uniswap.
I'm not sure. We can go into Uniswap, but I think Mark has a point. We need the DEXs on chain. We need improvement on the DEXs on chain, speed, reliability. But the reality is, it works very well in your closed wallet garden, and I think we all have a lot to thank the Sexters for, because you have distribution that we don't have on chain.
Yeah.
But the reality is, for someone like Wintermute to come in and effectively keep the price in line, you are not like with a token, you have one issue where they have a more mobile supply. Here you have to have, so someone like us will have the ability to mint and redeem all these assets. The asset universe suddenly gets very big. Liquidity gets spread even thinner. So not only that, for every one of these, we will have, someone like us will have to straddle, a firm like Wintermute straddles CeFi and DeFi today, and we're probably very strong on the DeFi side. We also have to straddle the TradFi side. And I think just that, it sounds simple, but very few firms actually straddle proper DeFi trading and proper TradFi trading, especially given the regulatory issues that had in the past. So I think that's just a simple hurdle. You need firms who see enough economic value there. And I think we can all buy into the fact that that will happen 5-10 years down the road. The question is, are those firms ready to engage today? And then clearly, a lot of liquidity on chain today sits in the Uniswap pool, but that's extremely capital inefficient. And I think it'll be a hard time to get people to put assets into an AMM where one has to be dollars, one has to be a tokenized equity. They have to have bought on Kraken or a similar place. I think that today will just make super bad depth experience for people coming to buy and size. And I think it all comes back to the point that you might have a small wallet in somewhere with retail users, but people also want to buy and size. And having that depth, I think that's the one thing in order to get DeFi to work. And I think also a lot of people says, tokenized equities, we all have a brokerage account. It's a pretty good experience, but it's not crypto, and it doesn't open up, someone that's not a Western European country. So you go to Africa, etc. They get access to US equities. That's kind of the dream. But that requires that we can provide a DeFi experience to them.
And well, I mean, so you have, the Uniswap, like the basic AMM, but DeFi is also, has been evolving pretty rapidly. Do you think we'll see more of these trading on like RFQ systems, like dark pools, as those kinds of, like modules come to the fore? Like how do you?
They're much more capital efficient for us. Yeah. And like, for example, like if you take a Wintermute or a trading firm, any trading firm, similar to how Tether, Circle, trading firms can mint and redeem.
Yeah.
Technically, this is just mint and redeem 5,000 equities, right?
Yep.
So you think about that liquidity spread. But then if it also has to be provided as, I say passive capital in Uniswap pool, like today, the capital you put into a V3 is passive, right? Like you can't move it every block. It's simply too expensive from a gas perspective.
Yeah.
So someone like a trading firm, they very often provide liquidity into these pools. And Mark can't just take his token supply that, the foundation has created. This is real stocks. He has to go out and buy and put it in there. So I think there's a hurdle there to overcome. And the incentive to also drive this liquidity into these AMM pools is probably hard to conquer around with real assets. And then there's these are securities. Like you're trading a security. It's not trading a token.
Also,
but two things I want to hit on there. The first is, if all we think about is the way Americans trade equities, I tend to agree with you that tokenized equities are probably not needed. I always give two of my own Canadian examples, which you'd think that would be true as well. It's super not true. The movement of my equities from my bank to a more fintech-oriented broker in April took 3 weeks, where I couldn't trade in those 3 weeks. Faxes were sent and phone calls were made. Just totally nuts. And that's a pretty modern economic system. The very first Xstocks billboard, which we had nothing to do with, but I think is really cool, is in Joburg in South Africa, where it is just way too hard for someone who wants to buy $100 of Tesla or the S&P 500 to do so in any meaningful way through the traditional system. As a Canadian, one more example, I tried to buy Adyen. Adyen's a European payment provider. They're not listed in the US or in Canada. I could spend probably a whole day on erroneous mistakes that went on with my broker, not actually with me, to allow me to buy something and actually, oh, by the way, we actually have no ability to sell it, so now you have to keep it forever. This is real stuff that's happening every day right now. And if you just think with your Robinhood hat on in the United States, you will not see these things. But that's just a super, super small piece of the puzzle here. The second is centralized exchanges for a long time said, this DeFi stuff, that doesn't matter. Those guys will never figure it out. They don't have any liquidity. And then we fixed it. And a bunch of people kind of went, oh shit, now I'm a little bit late to that, including Kraken, frankly. I would implore folks like Wintermute to not end up in the same spot and try very hard. I'm picking on you because you're on stage, but I know we're somewhat trying to be controversial up here, but the reality is, are these solvable? I started from, this is the chicken and egg problem more than it's anything else. Of course there's liquidity for equities. We all know that. That's super obvious. We just have to bring it on chain. That is a technical problem that is 100% solvable and will be solved. Will it be solved tomorrow? Will it be solved in a month? Will it be solved in a year? Probably more in a year category than tomorrow in my mind, but it's not like something that's impossible to solve. We will solve it, and then we'll be able to provide the kind of Robinhood experience that maybe many of us in this room are used to somebody in Johannesburg, and I'm really excited for that.
So touched on a bunch of things there, including like how, this is great. This is great. Let's get the controversy going. I want more disagreements. Yeah. Let's make this interesting. I think Mark touched on a few different sides, like the demand side of the equation, how we need, like more players to be like forward thinking here. Will, how do you assess these things from your perspective? How does demand look today? How will it evolve over time? Where will we see demand coming from?
Yeah. Great. I mean, fundamental question. So firstly, I think it's important to kind of distinguish by asset class. I think a lot of the conversation, Mark's perspective, comes from the tokenized equities space, which I think through the incredible structures you guys have put in place are permissionless on secondary. Whereas a lot of other RWAs, I guess depending on structure, some are maybe more or less permissionless on secondary, but others are regulated, SEC registered, and in some cases retail products in the U.S. In other cases, maybe they're not registered with the SEC. They qualify as exempt securities, and therefore they're only available to accredited investors or QPs in the U.S., which massively raises the hurdle in terms of who can interact with these products. I think some of the most basic barriers as of today are even just onboarding to become eligible to invest in some of these products. It's not always the smoothest process, and even then, some of the transferable on secondary products are not as seamlessly transferable as one might expect. It's not necessarily the same as me from my MetaMask, shooting it over to Jonas. There might be paperwork involved. There might be a leg in the middle where the issuer of the token needs to actually approve a transfer before it can be finalized. And any of those steps which break the synchronicity, the atomicity of the transfer, wreak havoc on DeFi liquidity. There's no way to interact with Uniswap in a meaningful way as of today, probably for a permissioned asset at all. But even if Uniswap in maybe some of your maybe a V4 pool could be configured to support a permissioned asset, if it's not atomically freely transferable on secondary, it creates a lot of issues, especially if the investor base is already a very small number of wallets. Which need to be onboarded and whitelisted before. So all of that sounds negative. And in fact, I think maybe many of the comments so far sound relatively negative. But I think we're kind of probing where the problems currently exist rather than what's working today. Yep. I think what is definitely working is that there is an increasing amount of huge, global scale market participants, asset managers primarily, but other incumbent financial firms, who are taking this space incredibly seriously. I think that seen on an asset by asset basis, for instance, starting with money market funds and tokenized treasury assets, which is where we're focused, fine. Most of these are permission products. Most of these are available only to institutional participants. Well, you know what? It's onboarded institutional participants in a TradFi space that are interacting with these products at scale for the most part anyway. And if we can put the emphasis, I think, to your question on where does demand come from, if we can put the emphasis on 24/7 instant transferability, on DVP, right, TradFi terminology, basically the ability to deliver the asset versus the receipt of cash in the form of a stablecoin at the same time, we can unlock capital efficiency, utility, and fundamentally, I guess, financial experiences for institutions which are impossible on any other rails than blockchain. So in my mind, initial institutional adoption and meaningful capital allocation is most likely to come around this tokenized risk-free asset space. So cash and cash equivalents. We now have stablecoins which replicate cash. We now have tokenized treasury assets which represent treasuries, and the ability to create more functional, more performant repo markets, sweep markets for very vanilla institutional use cases in which basis points matter a lot. I think it's a huge market opportunity. It's one that we're focused on at Uniform Labs.
It isn't there. I mean, I think it's hard to argue with Mark's point around this is where the future is going. But like, I think for us, it's more just a call to action that we're developing all these great products. We all agree on the equities, getting that on chain. The credit market is even bigger, getting mortgages, a lot of stuff on chain. I think just the one thing we have paused for thought is, in order for all this to work, this word liquidity needs to apply. And I think it's just we as any at Wintermute have interest in getting this on chain. More to trade, that's what we do for a living. It's in our interest. It's also where we're heading as a firm. But I think a lot of conversations when you speak with people that make product, they forget that wonderful word that's called liquidity, which decentralized exchanges have solved for crypto assets today. But I think that's really and I think, yes, it is technical. I do believe it's technical things we need to overcome, but they're not spoken much about. Just the fact that firms that straddle both TradFi and DeFi today, you can probably count them on one hand.
Yep.
And I think that's a little bit like where chicken and egg, but we develop all this amazing product. That's what's getting all the sound and the media. That's what the consumer thinks about. But the experience, the liquidity needs to come along. And I think that's a little bit how it was with crypto back in the day, in the 18 to 21 cycle. We did all these great products. Customer experience was horrible. Now we might be going to a little bit of the same. We're launching all these amazing products. Customer experience is not quite there. And I think there's a little bit where our is more like, let's also remember this liquidity point. I think that's kind of what we get. But it's probably also because we're a trading firm at the core, we're a bit more realistic around liquidity.
Yeah, to be fair, I think we're all pretty clear it's not there yet. I think, and we're going to need to get to a place where market makers can do both. That I think is just I don't know. I treat that as a given. The first 5 or 10 material market makers, whether they're TradFi market makers that are starting to think about crypto or vice versa, who can bridge this world, I think we'll be in a really advantaged position as these things get easier. I think that's cool and exciting and fun. I also think the exact same thing on the DEX side, the DEXs that start to really come to the table and realize, oh shit, liquidity pools don't work anymore for this type of asset. Completely permissionless, or the ability to only handle permissionless maybe doesn't work for certain types here. We have to come up with something different. The DEXs that figure that out and the chains that really lean into that will also have an advantage through this space. I think the idea that we just apply the crypto asset playbook and just go, oh, doesn't work here, so it's not going to work, is very similar to folks who said that about crypto a long time ago. And that's more my point here is, yes, it does boil down to liquidity for RWAs. Yes, we will get there. Yes, there's lots of smart people working on this problem. And I think today, it's actually why I'm much more bullish on equities than I am on, and money market funds than I am on mortgages. Mortgages are not the most liquid market even today. the idea that the first place they're going to be liquid is on chain, maybe a little bit harder mindset around that. I think more retail, you think more institutional, maybe it doesn't matter in a way, but I think those are the things that are going to be harder to do. But places where there's liquidity already, really what we're not actually talking about finding new liquidity. What we're actually talking about is bridging TradFi liquidity on chain. And I think that's just, if you reframe the question that way, it's a much simpler question to solve.
But isn't it also like we created this, it's fair to say crypto invented the perpetual future. That is to some extent much easier to create liquidity for, because there you don't need the underlying. I think it's found product market fit in crypto. There's no doubt about it. I think that's also one of the areas where we look to firms creating this, because also you have a CFD brokers today, which not always have the best reputation in TradFi, but technically a lot of the perp exchanges could easily spin up markets where the underlying is an equity and probably create a much better experience than a CFD broker does today. I think that's also a way where liquidity, and we see that with tokens, right? You have more liquidity in a lot of tokens on the perp markets than the underlying spot market. You would suspect the derivatives markets on chain for stocks will be better than underlying. I think that might also be helpful to get a good experience, because whether they buy a synthetic 1x perp or they buy the underlying on a wallet in Johannesburg, there might be a way to bridge the user experience earlier than actually buying the underlying.
For sure. Though it's funny because, and actually, I think equity perps are a great prerequisite in a lot of cases to doing really easy market making as well on chain for tokenized equities. But it comes back to the same thing. You need folks who understand the risk associated with equities and have equities hedging capabilities.
Exactly.
And we don't.
And
there's no one on the perp side at this moment who will simultaneously do that at scale, and that's where I think.
And you have the issue of 24/5 versus 24/7.
Yep.
And that becomes pretty material when you have a liquidation engine behind the perp exchange, etc. But again, it feels like those things are things that startups out there need to help figure out, or the big sexes or trading firms. Seems manageable to fix.
Yeah, it's funny because I see so much opportunity to fix some of these things and to in this liquidity space. I'd say if I was a startup today thinking about RWAs, I'd be thinking about those problems for existing asset classes far more than I'd be thinking about how do I tokenize the next illiquid thing right now. I don't think we have enough attention on it, but I do think over the next year, there's going to be a lot more attention on how do we find the technical solutions to some of these problems.
If we have folks in the audience today who are excited to build in this space and solve these problems, what is Will, what would you say in the, 2 minutes we have left, fire around here. What would you implore them to build to solve this problem for us?
Yeah.
Maybe start with Will and go down.
Well, I mean, in a sense, I've already stated my thesis, so I won't repeat it about all this, starting with treasury assets. But I think the one final point that I would make is that, in a sense, we're all here, kind of exploring different parts of the RWA space. If we don't solve liquidity, then, in a sense, none of what we're doing matters. If we have a bunch of tokenized financial products, but they're not, they can't be used for anything more than sort of buy and hold, then none of what we're doing matters. TradFi works just fine. So I think that's the final thought I'd leave us all with. This is really like the existential problem that we need to be solving right now.
Jonas?
It's hard to disagree with that point. I mean, I think there is a bit of of course, we at Wintermute are nerds at the core, but there is a dream that as a liquid stocks, you can take it, go on Aave, Morpho, use it as collateral. That creates some pretty interesting trade opportunities. The dream is someone can own an uncustodial wallet in Johannesburg, get access, deep liquidity, small spreads that probably competes with a Robinhood from an experience perspective. That would be pretty neat. But I think it requires a few building blocks, but it's probably also why we're all sitting around this table, is because we're excited about that.
Yeah.
I think Mark is probably the internal optimist, where I'm more the realist on how we get there.
It's funny, no one's ever called me an optimist before. I like it. TradFi does not work. It is not working. I'll just start with that as a fact. I don't think many of us would be in this room or be building in this space if TradFi was working. the way it probably should have. I spent most of my career trying to make banks suck less, and they still suck. There are small places where they don't suck, mostly because they're faking stuff on the front end, so that you don't see the horribleness on the back end. And I could spend a lot more than 2 minutes talking about that. But this is a space that I think the time is now. We figured out a lot of the legal pieces. We figured out the regulatory pieces. We have supply. And so now we're probably at the next building block, which is liquidity. I'm excited to work with builders here and around the world on that problem. I don't think I have all the answers. I don't think anyone here has all the answers. But what I'm very confident in is that the crypto community at large has a lot of really smart answers. And so I look forward to seeing all the things that folks build over the next year. And I think we have some of the primitives now to be able to build the top on in a different way.
That's a great note to end on. Thanks, Mark. And thanks to our panelists. And thanks to everyone here.